Thanks so much for tuning in to what is arguably one of the most important conversations of the day, JSW Steel. At the end of quarter one, Mr. Jayant Acharya had spoken about how Q2 was looking much better than Q1. And if you just look at the numbers, yes, the growth numbers look very strong. 350% uptick in EBITDA or so on and so forth is because there was a subdued Q2. But relative to Bloomberg estimates, on almost all line items, the company's beaten their estimates quite handsomely. He joins in right now to talk about the quarter gone by and the outlook ahead. Mr. Acharya, good having you. Thanks so much for joining in. Really appreciate your time.
Thank you very much.
You were bordering between hopeful and confident about a strong quarter two at the end of Q1. Has this played out the way you anticipated?
Yes, I think Q2 has been quite strong. The domestic economic momentum in India has been very strong at a backdrop of a very challenging global situation. While globally also, I would say it has been more resilient than what we had earlier expected. But we do have challenges. Geopolitics is one concern. Having said that, India, both economic growth as well as the steel demand has done extremely well. And that is reflected in JSW Steel's numbers as well. We have seen a very good growth in terms of revenue, volumes, and EBITDA, driven primarily by domestic demand. I would say that our sales mix and product mix, which is in terms of value-added and special products, which we have done, has also added to the overall profitability. So 62% of our sales was in value-added and special products.
Got it. There is this conversation of uptick in prices, maybe for finished products as well, but for raw materials. The last few days, uptick in freight costs, so on and so forth. Crude prices, we all know any which have done that. Is that a niggle for quarter three which worries you at all or not quite?
So yes, it does. So I think our raw materials have gone up. There is no doubt. Iron ore and coking coal costs have gone up in the last, I would say, month or two. However, let me put it this way that in the last quarter, we got a benefit of lower coking coal prices, which flowed in. While there was a drop in the price of steel in quarter one, which flowed into quarter two, it was offset by lower coking coal cost as well as price increase in the Indian domestic market in August and September. We will see some benefit of this price increase flow into October-December quarter, as well as some price increase which has taken place in the month of October. However, it will be offset by a higher cost on account of coking coal and iron ore. Our volumes are likely to be better. I think BPSL, the capacity expansion is on track. We should see that coming on between the end of quarter three and quarter four. That should give us additional volumes. We had some maintenance shutdowns in quarter one in our existing operations, which will now is back on full track. So we should see better utilization in our existing operation. So better volumes should give us better absolute EBITDAs for the quarter.
Got it. What about raw material availability? I mean, independent of whether the tech plants, etc., are getting postponed, shelved, what the case may be. But how do you, because you are expanding operations at such a and reaching such a larger scale relative to what you are right now? I mean, even though you're the largest player right now, what happens to raw material availability both on the domestic front as well as from the international front?
So yes, that's a focus area. We want to integrate our raw materials, especially the iron ore part. So on iron ore currently, as we had mentioned earlier, we have got about 13 operating mines. We bid for the mines in the auctions and we have won 7 more. So those are on track for getting developed. 3 of them are in Karnataka, 2 in Goa and 2 in Maharashtra. We would get the benefit of those captive mines in the as we go into this next few months and the next year. We have also bid for 2 coking coal mines, which are now in the process of getting developed. That would give us some additional coking coal to the extent of 1 million tons in the year and a half or so. We are looking at coking coal assets in India for any mines which may come up for auction. We will also continue to look at international assets which make strategic sense from a coking coal quality perspective, as well as from a commercial value perspective. So that is something which we'll scan the environment and look at.
Okay. something on the anvil, or is it difficult to say that right now?
No, difficult to say. Nothing concrete as of now. I think we are still looking at anything which makes strategic and commercial sense.
Okay. One question on how do you think about the whole expansion aspect? Because while the Chinese data recently was okay, US is looking okay, India is looking okay, and maybe that helps the world's GDP to get revised higher. But we know that a bunch of areas are actually kind of slowing down. Do you, as somebody who's leading the India's largest steel company, still go ahead at full throttle with the capacity expansion plans that you have, or are you moderating that a little bit? How do you think about it?
No, we are not moderating at all. And the reason is that India is on a very strong growth path. And the way we see this, that this decade is probably India's decade. We would build very strong, the nation building phase of India is going on, and we would build very strong infrastructure, and that would require steel. Manufacturing is extremely strong. The energy transition piece is working out very well. The consumption story, through a very inclusive growth which is happening on the rural side, is also increasing the per capita income. We are seeing businesses on the rural side improving, in terms of various areas because of connectivity, water, electricity, roads, communication networks. So that benefit which you will see in the remaining few years is going to be massive. And our sense is that 8 to 10% growth in terms of steel demand is something which is very much possible. So you will add incremental demand of 10 to 12 million tons every year, which means in the next 7 years to end the decade, we would probably have 100 million tons of extra demand. So therefore, we need to add capacity. We are on track to add capacities in India. Next year, we will be at 37 million tons. Our capacity expansions at Vijayanagar BPSL is on track. Additional debottlenecking in Vijayanagar will also happen during calendar year of 25. So we should be 37 million tons in India and 38.5 million tons globally. Going forward, we are looking at brownfield expansions in our existing locations because that gives us lower specific investment cost as we expand capacity.
Got it. One last question. There's a bunch of articles around how closer to the elections, the road tendering aspects continue. So essentially the spend on infra continues. We know the real estate cycle is still looking strong. At least the organized one is certainly looking like that. Are you hopeful of demand remaining steady to improving in the second half now that monsoon also behind us? Could it be a stronger second half from where we are right now?
See, we have done, I think India overall has done quite well in a traditionally weak quarter. So July, September is supposed to be a weaker quarter, monsoon disruptions, etc. But I think India has played out very well. The first half of this year saw a demand growth of 14-20%. Going into H2, I think we see a seasonally better second half. So we would continue to, I think that would continue to be reflected. Automotive is looking good. I think infrastructure build-up is looking quite good. Even though there is an election year around the corner, but I think the way situations have worked out, I think the focus of the country to build infrastructure has been unwavering. The focus on increasing our self-reliance on manufacturing is also equally strong. So we do not see the election year to be disruptive. I think we will continue as a country to focus on our economic growth and make it more inclusive. So therefore, going forward, I think in the medium term, we see a very strong India story.
Great. Mr. Acharya, congratulations on what turned out to be a really good quarter relative to estimates and even otherwise, and all the best for an even better second half.
Thank you, Niraj. Thank you very much.
The pleasure was entirely ours, and wishing you a very happy festive season as well.
Thank you. Same to you.
Thank you. And viewers, thanks for tuning in.